Hello guys, thank you for joining us again today. Today we're going to do things a little bit differently. Instead of just listening to me talk, I brought along my friend Alan. He's a mortgage loan officer, and we're going to dive deeper into the loan process and how that works. And we're going to go over the questions that we hear most often when people are looking to buy a home. Alan, if you can introduce yourself, tell us what you do, who you are, who you're with.
Sure, yeah. So again, thanks so much for having me here today.
Of course.
My name's Alan Giroux. I am a loan officer with Town Bank Mortgage, and I've been in the business now for about 21 years, and I've been working for Town for about 5.5 years now, and really excited to be here with you. Awesome. To go over some of this information for some of our prospective buyers.
Perfect. Yeah, I think it'll help. They can just go to this video if they ever have any questions. Alan, so typically the first point of contact when people are looking for a house is they'll call me. And then I'll very briefly pre-approve them and see what they want. But I always hear, it's always the same kind of questions that I come across. It's always the same thing. So I wanted to share these questions with you, and maybe you can dive deeper into them and explain to people what these questions mean and give people some clarification.
Sure.
So what does a lender do? Why do people need a lender? Where does a lender come into play in a real estate transaction?
Yeah, so that's a great first question. To start right off at the basics. So when your clients come to you, for the most part, most of them don't have the financial means to purchase the home outright.
You mean as in like buying in cash?
Buying in cash, that's right. So generally speaking, they're gonna need to put down a percentage, not always, but for the most part, they're gonna have to put down a percentage of the price of the home. And then this is where we as a lender would step in. So upon approval, the lender would then provide the remaining balance of the price of the house so they can finish the sale and purchase the home.
Okay, so the remaining part of the sale, is that your money that you're putting up, or do you just represent a bigger company that's putting up the money?
So yeah, so I work for the bank, and this would be the investor that we qualify the mortgage with.
Okay.
They're the ones who are providing the funds.
Okay, and going into that, what we call in the industry, we call it a pre-approval. There's also a pre-qualification. Can you dive deeper into what the difference between those two are?
Yeah, so that's another great question. Very distinct as far as what a pre-qualification is and a pre-approval, right? So a pre-qualification is when a client just speaks in generalities to a lender, right? So there's no validation in terms of income, there's no validation in terms of assets. They are just giving generalities as far as what they make and what other liabilities they have. So in terms of strength, it's not very strong, right? Whereas an actual formal pre-approval, we are validating their income. We are validating their assets. We are going to do a credit check to validate whatever other obligations that they may or may not have, right? So, we're formally running them through an underwriting system. So they are getting fully vetted in terms of their income and assets, and it's a much stronger letter to provide when looking to buy a home.
Okay. So is pre-qualification, is that a letter that you provide, or is that just like you're telling somebody that they're pre-qualified?
So some lenders do actually provide a pre-qual letter or a verbal confirmation. Again, in terms of strength, it's just a piece of paper.
So to sum it up, a pre-qual is basically you're listening to somebody and you hope that everything they're saying is the truth, and that's what you're giving the pre-approval based on.
That's right, right.
So if someone used that letter to try and buy a house, and then that pre-qual didn't go through and they couldn't be able to close, they would end up losing their deposit on the house.
That's very true. Okay. Yes.
So pre-approval is also stronger in that aspect because it can save you money in the long run.
100%. Okay. Yes.
Perfect. Gotcha. And when getting a pre-approval, there's different loan types, correct?
Yes.
So what are those different loan types and what's available to people as far as it goes to first-time home buyers and not first-time home buyers?
Yeah, so again, I always like to say that there's a loan product out there for everyone, right? So everyone has a different situation. So in speaking about first-time home buyers, generally speaking, your first-time home buyer doesn't have a whole lot of money to put forth for any down payment and closing costs, right? So there are loan programs designed with minimal or no down payment required, right? There are products through Fannie Mae and Freddie Mac and these are your conventional loans, right? So whenever you hear of somebody having a 30-year mortgage, this is generally who they're going through, Fannie Mae or Freddie Mac. So there's programs through those two agencies. There's also government programs. There's FHA loans, which is through the Federal Housing Administration. There is VA loans for eligible clients for VA loans through the Veteran Administration. There's also USDA loans, and these are loans through the U.S. Department of Agriculture, which are geared for more properties that are in more of a rural setting. So if you have clients that are looking to maybe move a little bit outside of the city, this might be a good fit for them. So yeah, as I was saying, there's so many products, and there's a loan out there for everyone.
And with these loans, how much down payment do they usually require? Because some of these loans you can get away with 100% financing, meaning there's no down payment. And some of them you have to put some money down, correct?
That's correct, right. So on the conventional loan side, Fannie Mae and Freddie Mac, they both have 3% down programs. There are some restrictions in terms of income that do fall into those loans. The FHA loan, you have to put down 3.5%. FHA is a great product if your credit scores are more middle of the road. This could be a better path to take in terms of interest rate and payment. There's two loans that are available where you don't need to put any money down, and that's the VA loan and the USDA loan. So to qualify for the VA loan, you have to either be active military or a retired veteran. So you have to meet those requirements, and then you can do 100% financing. Interest rates are favorable. There is no private mortgage insurance on that loan. So it's a great product for those who are eligible for it. The USDA loan, again, is very specific to the location of the house. So again, if they're looking to move out in the country, this might be a great fit for that type of buyer.
And for USDA loans, from what I understand, if you want to see if that location qualifies for USDA, you can go on Google and search USDA map area.
You can, yeah. You can go right to their website and you can do a search on the property, and it will tell you if it falls within the zone of USDA.
Okay. And you mentioned with conventional loans, it's 3% down, and FHA, it's 3.5% down. Is this minimum? Is this maximum? Can clients put more down if they wanted?
Yeah, of course, they can put more money down. Generally on a conventional loan, if you can put 5% down, that might get you a little bit better interest rate, a little bit more favorable PMI, whereas if you only put down to 3%. And same goes with FHA. The more you put down, obviously, the less your payment would be. So it's just a matter of really what you want to part with.
Okay. And does putting down, let's say, compared 5% to putting down 50%, is the interest rate going to change much there, or is it going to stay pretty much the same?
Not necessarily. I mean, sometimes if you're putting more money down, it does help with the rate. But the two things that drive the interest rates are, number one, your credit score, but also the size of the loan as well. So sometimes if you're putting a lot of money down and your loan amount is smaller, it may actually work against you in terms of rate.
That makes sense. Alan, I think we hit the biggest questions that I get. Is there anything that you hear often that we didn't cover today?
I think we covered a lot of great things. What I probably would rather say here is, as far as advice goes, if you're looking to buy a home, definitely speak to your local lender, speak to a live person, give them all of the details on what you do for a living, what have your credit checked, get yourself formally pre-approved before you start looking, and that's going to save you, that's going to get you ahead of the game and save you a lot of heartache in the end, ultimately, if you can't get yourself pre-approved. Another
thing I wanted to touch on, a lot of times you'll meet people and they think they can hide stuff from their lender, and they don't realize that you're actually on their side, that the more they tell you, the better they can help you. Like, if they hide anything, you're gonna find it anyways, right?
That's right, yeah. So it's always best policy is to be honest and forthcoming. We are going to find out. So we dive deep into your financials and your credit history, and if you think it's something that we're not gonna find out, we will find out. And again, the only person you're gonna harm in the end is yourself financially. You could lose money in the transaction if we can't get you formally final approval.
Correct. Yeah, and I see that often where people think that the loan officer won't find out, we always find out.
That's right.
Sometimes we can get through it, but it just causes a lot more headaches, and we have to keep extending, and it costs more money in the long run. Alan, thank you so much for coming on today. We appreciate it. Maybe we can do more videos. Maybe we can dive deeper into construction loans. Maybe we can dive deeper into investment properties. Thank you. I appreciate it.
Thank you so much.
Thank you.
Thank you.
Bye.